Imagine this. A major storm rolls through your neighborhood. You've got damaged shingles, a compromised fascia, maybe water intrusion in the attic. You file your insurance claim, upload your photos, and you wait. Somewhere inside your insurance company's system, a machine, not a person, a machine is looking at those photos, reading your documents, and deciding what your home is worth repairing. Here's what's wild. You probably had no idea. I'm Jared. Today I'm breaking down something that should be on every homeowner's radar and every contractor's radar. The explosive growth of artificial intelligence inside the insurance claims process, what regulators are actually saying about it, and most importantly, what you can do to protect yourself. Stay with me. This one matters. Before we get into the data, let's establish who we're hearing this from, because this isn't some fringe blog post. This comes straight from government testimony. The NAIC, the National Association of Insurance Commissioners, represents the NAIC, the National Association of Insurance Commissioners, represents the chief insurance regulators of all 50 states, the District of Columbia, and 5 U.S. territories. These are the people who oversee the insurance companies that insure your home, your car, your life. In December 2025, the NAIC testified before the New York State Assembly on the use of artificial intelligence in the insurance underwriting and pricing. And earlier this year, March 2026, they published a formal issue brief doubling down on their concerns. This is the national regulatory body sounding the alarm, and we're going to walk through exactly what they said. Let's start with some numbers that might stop you in your tracks. The NAIC conducted surveys across major insurance lines. Here's what they found in terms of AI adoption: either already using it, planning to, or actively exploring it. 92% of health insurers, 88% of auto insurers, and here's the one that directly affects most of you watching: 70% of homeowners insurers. 70%. That means if you have homeowners insurance today, there's a chance that your insurer is already using an artificial intelligence or is in the process of deploying it. And these aren't just back office analytics tools. This AI is touching the decisions that directly affect your pocketbook. So where exactly is AI showing up? Let me read you directly from the NAIC's testimony to the New York State Assembly, because I want you to hear it in their words. In underwriting and pricing, AI is being used for automated verification of policy characteristics, inspection image analysis, meaning AI is literally looking at images of your property, rating class determination, risk scoring and assessment, telemetrics, retention modeling, and trend forecasting. But here's where it gets very personal for contractors and homeowners. Let's talk claims. The NAIC explicitly called out that AI is being used to help with the determination of a loss settlement amount. That's AI settling what your claim pays out. It's being used for document summarization, meaning AI is reading and digesting your claim documents, damage assessment, and this is a big one, detecting potentially fraudulent activity. That last one deserves its own moment. AI fraud detection flags patterns it thinks look suspicious. And if your claim gets flagged, fairly or unfairly, that can delay your settlement, trigger a deeper investigation, or in some cases result in denial. And you, the homeowner, may never know that an algorithm made the call. For contractors, this hits different. You're the one out there on the roof documenting the damage. You're writing the scope, you're doing the estimate, and somewhere along the way, AI has already looked at a satellite image or a photo the adjuster uploaded and decided what it thinks the damage is worth. Your professional assessment versus a machine's image analysis? That's the battle that's already happening on job sites across the country. Now let's talk specifically to the homeowners watching this. The NAIC put it plainly in their testimony. Regulators are attentive to issues of transparency, accountability, appropriate human oversight, and the potential for unfair discrimination, including when AI systems rely on data that may reflect historical or systemic bias. What does that mean for you? It means AI doesn't just make mistakes. It can make biased mistakes at scale because it was trained on historical data that may already reflect unfair patterns. And if your claim is decided or your rate is set based on a biased model, you have no visibility into that, no explanation, no appeal form that says AI bias as a checkbox. That's the gap we're in right now. The good news, existing customer protection laws still apply, Unfair Trade Practice Acts, Unfair Claims Settlement Practice Acts. The NAIC is clear. They still apply whether the decision is made by a human, an algorithm, or third-party vendor. Your rights haven't gone away. They just got harder to exercise. Contractors. This section is for you, and I need you to be paying close attention. Here's the dynamic that's playing out in the field right now. AI is being used to set loss settlement amounts before many adjusters even step foot on a property. Image analysis technology is being used to assess damage scope from photos or aerial imagery. And AI fraud detection is flagging patterns, legitimate claims included, that trigger additional scrutiny. What does that mean practically? It means by the time you show up with your scope of loss, your line item estimate, your material costs, the insurance company's AI may have already generated a competing number, and that number often comes in lower. Not because someone who understands the construction industry reviewed your work and disagreed, but because a machine interpreted an image and generated a value. And here's the frustrating part. There's no requirement right now for AI systems to explain their output. The NAIC is working on it, but today in most states, your competing estimate is fighting a black box. Now, I want to address something that happened in December 2025 that most people outside the insurance regulatory world completely missed, and it matters a lot. An executive order was signed that significantly impacted state-level regulatory authority over artificial intelligence. And the NAIC issued a statement saying that they are deeply concerned. Here's what they said. This executive order should implicate routine analysis tools insurers use every day and prevent regulators from addressing risks in areas like rate settling, underwriting, and claims processing, even when no true AI is involved. Read that again. Even when no true AI is involved. We're talking about an order so broadly written that it might tie the hands of regulators trying to police even basic data models. The NAIC went further, saying it introduces legal uncertainty, which may weaken the insurance market by delaying business decisions, determining investment, and postponing essential consumer protections. For you as the homeowner or contractor, this means the people whose job it is to protect you in the claims process are currently navigating legal uncertainty about what they're even allowed to regulate. That uncertainty trickles down to you. To be fair, I want to be balanced here. The NAIC has not been asleep at the wheel. Let me walk you through what they've actually done. In 2020, they adopted their Principles of Artificial Intelligence, a framework for the responsible use of AI in insurance. In December 2023, they adopted a model bulletin on the use of AI systems by insurers. This bulletin tells insurers that their AI tools have to comply with all existing insurance laws, establishes governance and risk management expectations, and puts insurers on notice that regulators can request information during examinations. More than half of the states have now adopted this bulletin or similar guidance, and the NAIC is currently developing an AI systems evaluations tool to help regulators actually examine AI systems during insurance investigations. Progress is happening, but I want to be honest with you. It's not keeping pace with adoption. While regulators are building evaluation tools, insurers are already using these systems on millions of claims every year. Let's get practical. If you're a homeowner and you've got a claim coming up, or you're in the middle of one, here are your action steps. Step 1. Ask your insurer directly whether AI was used to evaluate your claim. You have the right to ask. You may not get a perfect answer yet, but you're planting a flag and creating a record. Step 2. Request a human review. If you believe the settlement offer is inadequate, request that a human adjuster physically inspect the property and review the assessment. Step 3, document everything. Every photo, every invoice, every contractor estimate, every conversation with contractor or adjuster or third-party people. Documentation is your ammunition. Step 4, know your state's unfair claims settlement laws. These laws require insurers to investigate claims fairly, provide timely responses, and give you written explanations for denials. AI doesn't exempt your insurer. And step 5, file a complaint with your state's Department of Insurance if you believe AI produced a biased or unfair outcome. Regulators need these complaint records. Contractors. Your action steps look a little different, but they start in the same place. It's all about documentation. Step 1, over-document every job. Time-stamped photos from multiple angles before you touch anything. Detailed written scope of loss with material specifications. AI image analysis struggles with granular written documentations. Lean into that. Step 2, when you're up against a low AI-generated estimate, push back with your own licensed professional documentation. A licensed contractor's signed scope of loss carries legal weight with an AI output that does not. Step 3, educate your customers. Homeowners don't know this is happening. Take 5 minutes to explain that AI may be involved in the claim and that they have the right to request a human review. That's not scare tactics. That's serving your customer. Step 4, if you're seeing a pattern, if a specific carrier is consistently coming in low with AI-generated estimates, document it across jobs. Report it to your state insurance department and your contractor association. Step 5, engage. Join your state contractor association. Know what's happening in your state legislature around insurance reform and AI oversight. This is your business revenue on the line. I want to leave you with this. The NAIC, the most authoritative voice on insurance regulation in the United States, is testifying before state legislators and issuing formal policy briefs about AI in insurance. They're describing technology that's already handling the determination of your claim settlement, already doing damage assessments on your property, and already flagging your claim for potential fraud. And at the same time, a federal executive order has introduced uncertainty that's tying the hands of the very regulators whose job it is to protect you. This isn't a hypothetical future scenario. This is the landscape right now in 2026. The gap between where technology is and where the oversight is, the gap is where you, the homeowner, and the contractor are vulnerable. But awareness is power, and documentation is your defense. If this video gave you something to think about, please share it with a homeowner in your neighborhood, with a contractor on your crew, with anyone who's ever had to fight an insurance company for a fair payout. Subscribe for more content on navigating the insurance industry as a contractor and a homeowner. I'll be bringing you the information that the industry doesn't exactly advertise. I'll see you on the next one.